What's going on, everyone? In this video, I want to show you guys how you can win at trading the NASDAQ 100 with three, okay, count them, 1, 2, 3 moving averages. Now, again, there's 1,000 ways to trade. Am I saying that this way is the end all be all? No. Am I saying that I trade this way every single day? No. But what I'm giving you is a little bit of a system, a little bit of a foundation that maybe you can use to help you read the markets a little bit better. Now, again, before I go on and I talk about these moving averages and I talk about the strategy, you got to understand one thing. The market changes each and every single day. Some days we have big ranges, low volume. Some days there's high volume and algos are turned on. It's just, every day is different, okay? Every day is different. If you think that you're going to learn one particular way to trade or one strategy and you're just going to make money hand over fist each and every single day, like some light bulb is just going to click off and you're just going to magically understand everything, it's not going to happen, bud. It's just not going to happen. But with time, with experience, taking trades, taking losses, taking wins, journaling, practicing good risk management, you can build yourself a system where you can carve out a piece of the market and actually make money, whether that be you choose to do it full-time, part-time, whatever. It does not matter. So what we're going to be looking at here is a 20-day moving average, 20 simple moving average, 50 simple moving average, and a 200 simple moving average. The next thing we're going to do is look at a time window. Okay, so I'm big on time windows in my room at Evolution Traders. I believe that you should dedicate a time window where you can sit down at the charts and actually trade and look for setups and wait for setups and be patient and manage risk. Okay, I'm not a believer where market opens and you should be sitting here from market open to market close, just like, you know, like a deer with staring into the headlights, right? Hoping that you're going to get something, you know, trying to fabricate something out of nothing. Whether you get a setup in your time window or not is what it is, okay? And you may not like to hear that because of the fact, that you don't understand that every day you're going to get an opportunity to trade. Okay, every day you're going to get an opportunity to trade. So what we're looking at here is the market open. We're looking at that into 9 a.m., which is around lunchtime, New York. So I'm looking at Pacific Standard Time. We're also going to be using these three moving averages to give us areas of supply and demand. So for example, if we use this 20 SMA as our shortest nearest term sentiment moving average, we're going to be trying to stick with trades that are going with the trend of the smallest moving average. Okay, so in this particular case, if we're trading over the 20 period moving average, that's going to be our floor. That's going to be our demand zone, right? Because the 50 and the 200 are above us. So in this particular case, once we do start to close over the 20-day moving average, then we can kind of look at this in terms of, we want to be a little bit more long-sided bias. Now, if I look at the market open and I was to actually draw a price level line here down at the lows, well, it's giving me a floor. Okay, so if it's giving me a floor, I want to stay on top of this floor trading to the long side. Now, once we look at this, we want to really start to focus on one or two setups only, right? If we get those one or two winning setups, then we want to call it a day. However much size you choose to trade, whether you trade 10 mini contracts or you trade 10 micros, or you trade one mini contract or you trade one micro, that decision is yours. But once we get into this trade, we need to do one thing first. We need to analyze the risk. It's a 50-point candle right off the open. So again, I don't know if you can really trade 10 mini contracts. It wouldn't be the smartest thing to do, obviously. So we need to be probably more so on the micro side of things so we could manage risk a little bit better. But as long as we're trading over this bottom floor here, and as long as we're holding this 20 moving average, we can definitely look for trades to the long side. Now, what are we going to use as our price target? Well, we're going to use two things as our price target. We're going to use the 50-day moving average and the 200 as our price target. So if we get in long here off the open, once we start to confirm those highs, we want to hold this trade even though we're in drawdown here because we're still over the lows. And we want to be selling for profit the closer we get into the next supply zone, in this particular case, the 50-day moving average. Now, there'll be another trade that sets up after we get over the 50-day moving average, okay? So once we test this 50-day moving average, you can see us test it, we break it, Here's a following candle at 7:05 that confirms actually the 30-minute opening range as well. And then we want to get into this trade, and we want to hold this trade as close as we can humanly possible into this 200-day moving average. Now you can see that here we don't never test a 200-day moving average, but you need to be kind of smart, right? Again, this is where common sense goes a long way in trading, because getting in over 19,546 all the way up to 19,591 is over a 100-point move. If you're looking for a price target that's bigger than 100 points, I don't really know how to help you, right? For me, I'm taking anywhere between 5, 10, 15, 20 points max on my trades, and I'm looking for 1 or 2 of those trades, and I'm looking to move on to the next day. That's it. I want to keep my emotions and stress levels down. This is the way that you can use these 3 moving averages to give you price targets, to give you levels of support. Now, once we start to trickle around here, we never put in a high over the 200-day moving average. And now and only then we can start to think maybe there's room potential to the downside. You can start using things like the double wick top here as a high of day, as a cheap short, meaning that if we do break this high of day, you want to get out of a short position. Once we test the high once, we pull back, we test it again, you see that there's a failure to confirm continued price. You can then start a short position, and what would you want to do? You want to play this down into demand, that demand being that 50-day moving average. And if you do decide to hold below that, again, that could be your own prerogative. But if you do, you need to be taking profits here at the 20-day moving average. And then from there, you need to be getting out of that position and restarting that cycle. I hope this way of trading using these 3 moving averages on your chart can help. Put them on your chart, do some back testing, because back testing is very, very crucial and critical. Do some back testing, start going back and looking at how price reacts around the 20, the 50, and the 200. You're going to start to build your own trading system. You're going to start to build your own risk management system. Do that, and I guarantee you, you're going to be a lot more successful, profitable, and less stressed out. If you want to trade with me and the team at Evolution Traders, that link is down in the description box below. If you're looking to add more prop firm evaluation so you can get more funded accounts, I would definitely recommend, if you're a scalper / day trader, again, all prop firms you can't hold overnight, so you're all day traders. But if you're a little bit more of a scalper like myself, I would recommend Apex, because you can have up to 20 accounts. That link is down in the description box below, and I will see all of you guys on the next video.